This is a normal graph of what cryptocurrency looks like on the hour, the day, the week, the month, and the year. Now, I legally have to say this, by the way. I'm not a financial advisor, and the Fed regulates heavily on who is allowed to give anyone financial advice, so I just want to make that disclaimer. I also realize that I will be discussing a significant lifestyle change concerning personal choices with finances, but investment in crypto could help you become financially free. Today, I will be discussing why you should consider investing in crypto. You should invest in crypto because of its high return potential, diversification of assets, its technological advances, and community engagement. Now, I just said that I'm not a financial advisor, which is true, but I have invested in crypto for over 3 years, and I've learned a great deal about all of its benefits. Now, you should invest in crypto because of its potentially high return rates, its security, it diversifies your financial portfolio, increases community engagement. All of these will be discussed in the speech, as well as the common misconceptions and the issues. The first reason you should invest in crypto is the potential for the high returns. Using indicators, which most day traders will use, allow them to make informed decisions on when to buy and sell cryptocurrencies. In the book, Day Trading Quick Start Guide by Troy Noonan, published in 2020, claims that day traders use numerous indicators to help them make informed decisions when trading. These are highly effective and make a huge difference in the day trading world. Some of these include chart patterns, which they will use when they're looking at a chart. And these are reverse head and shoulders, flags and pennants, etc. These chart patterns are responsible for indicating price fluctuations, as well as candlestick patterns, where traders will look for dojis, hammers, and shooting star patterns. These all allow you to see the potential trend reversals and continuations. There's also RSI, which is a abbreviation for Relative Strength Index. This monitors the pace and the change of market movements. It is important to note that it takes significant amounts of practice and emotional control in order to master these indicators. So the best way to think about these indicators is to think of them as a crystal ball showing you the future market trends. Moreover, a journal published by Sinisa Bogdan titled The Impact of Liquidity and Investors' Sentiment on Herd Behavior in the Crypto Market in 2023 suggests that using a crypto with higher liquidity for using these trading management techniques will work best. For example, XRP has a higher liquidity, allowing you more options and preventing high losses in volatile and fluctuating markets. Also, doing your own research helps to prevent high losses when it comes to high-risk investments. Another benefit of investing in crypto is diversifying your financial portfolio. Cryptocurrencies help to further diversify your financial portfolio, and these assets help to spread your risk thinner across all investments, bringing you steadier returns, more opportunities to capitalize off the volatility or long-term investments. In the scholarly article, Should Investors Include Crypto Assets, updated in September of 2023 and written by Miriam Youssef, found that under the same level of risk, a portfolio with crypto assets had a higher return rate than a portfolio with just traditional assets and a portfolio with traditional assets and solely Bitcoin. And furthermore, in an article published on RTC News on April 26 of 2023 titled Banking Crisis Fears Lift Cryptos Again, shows that cryptocurrencies are often viewed as a digital value stores like gold. When the confidence in the banking system wanes, investors turn to crypto to store their assets to help protect them from devaluation and inflation fears. Now that we've discussed why crypto is beneficial in short-term and long-term trading, as well as the diversification of your assets, I'm now going to move to talk about why crypto increases community engagement and the common misconceptions about crypto. In an article by Why EduFinance titled Are Cryptocurrencies and Blockchain Technology Disrupting Traditional Banking Systems, published on November 2nd of 2023, summarized some of the benefits of investing in crypto. First, Crypto allows access to unbanked and underbanked Americans. They can now pay, invest, save, and thus increasing financial inclusion. Second, crypto is a decentralized finance, which means that people no longer require banks or banking fees. So for opening a bank account, the interest rates, and crypto also has extremely low transaction fees. Finally, nonprofit organizations and charities can receive donations directly. And with using blockchain technology, you're able to see exactly where the money went. Finally, I will talk about the common problems and misconceptions with cryptocurrencies. Number one, like I showed you, crypto is extremely volatile and it fluctuates regularly. Because coins are so new, it's really easy for the coins to be tied to media, so we don't actually know exactly what they're worth. And number two, crypto is not universally accepted as a currency. So, however, you could book a vacation using Bitcoin and donate directly to Wikipedia using Bitcoin, but you couldn't necessarily buy a Tesla or buy pizza using Bitcoin. Moving on to common misconceptions, cryptocurrencies are called cryptocurrencies because they're secured by cryptography and secured by blockchain. Now, most people don't necessarily understand what blockchain is. Blockchain is not Bitcoin, and blockchain is not a currency that is not a currency. Blockchain is a way of securely organizing the transactions made to prevent fraud and theft. It is a transparent and public ledger. Another common misconception is that crypto uses high volumes of electricity due to the number of computers processing crypto transactions. In a study done in 2021 by Forbes Advisor and written by John Schmidt and Benjamin Curry, they found that a year, Bitcoin uses 127 terawatt hours, whereas the traditional banking system uses over 263 terawatt hours. There are also plenty of coins that are more efficient and use less energy than Bitcoin. According to that same article, Ethereum, the second most invested in cryptocurrency, processes transactions 11 times faster than Bitcoin does, and it also uses significantly less energy. Finally, the last big misconception is that Bitcoin and crypto markets are not anonymous. They're synonymous. So although there isn't any personal information listed on your crypto account, it does have a personal key that is permanently locked into blockchain upon using transactions. As a result of this belief, many think that the crypto market was built for criminal activity. However, in a study done by Chain Analysis in 2023 by the Chain Analysis team, they stated that 0.24% of crypto transactions were criminal, whereas 5% of traditional cash transactions were criminal. So if you're gonna make an illegal transaction, you should probably do it with cash. In conclusion, today we have discussed some of the amazing benefits of investing in cryptocurrency. I've talked about the potentially high return rates, the security of crypto, how it diversifies your financial portfolio, and increases community engagement. I also talked about the common misconceptions and the issues. I hope today everyone is inspired to invest in crypto and capitalize on your own and your community's financial gain. Thank you.